Bank of America out with a bearish note on a couple of big oil names today. Chevron and ConocoPhillips downgrading them both to neutral. Stocks are under pressure, hovering near session lows. We've made it our call of the day. Pete, you own Chevron.
I do.
You disagree with the call that they say, look, the tailwind from this recovery in oil prices is all but over.
Yeah. Why I disagree is I think that a lot of these oil stocks, mostly Exxon, but Chevron as well, hadn't moved as much, Scott, with the price of oil as they normally would. And so because of that, I think there's still room to catch up. Oil somewhere near that $70. When you look at Chevron, when you look at what they're doing with the repurchase program, which is not just something to funny numbers, this is something they've been doing for years and years. They continue to shrink their share count. But on top of that, the cash generation that they've got, when you look at the valuation versus their peers, look at where you are with Chevron. This is a name that I know does have exposure, obviously, over, across the rest of the world. 41% of their revenue does come from the U.S., the rest elsewhere. So there is some concern because of that, Scott. But I look at this, I look at the valuation, I look at the cash generation, and I look what they're doing in the Permian. I think they're doing a lot of things right, and they've made a huge investment in LNG that I think will pay off for them.
Okay, so they cut the price target on Chevron to 135 from 150. What do you think about this call?
I have to tell you, it's very difficult right now to gain an understanding of crude oil regaining a bullish trend or if it is going to roll over into a bearish trend. And that's the problem I have with this call. I own Oxy. That's my play. As far as big oil names, there seems to be this outperformance on the part of ConocoPhillips. I think all three of the majors obviously are going to benefit by what they've done the last couple of years in terms of diversification. I'm still waiting for ExxonMobil to see the benefits of the investment in natural gas, which trades at 277. But back to your original question, Scott. Listen, I didn't have an energy name in the portfolio I just gave. I just kind of think energy is in a sideways pattern.
Yeah, so obviously these guys had an overweight or a buy recommendation if they downgraded it to neutral. So unfortunately for them, they've been wrong. These stocks have all gone down. So now they've gone down. The price of oil is a little bit higher. It seems like a tough call to make right here when they've come down, 15%.
Would you own either of these names?
No, but we're underweight oil by 50% versus the index, and we don't own either of these. We own an oil service and Phillips 66. But I don't think they're a bad place to be. I just think you probably want to be underweight.
And you own Schlumberger?
Yes, own Schlumberger. And that's been a bad stock, too, but it hasn't hurt us much because we own so little.
I think it's a good call by the analysts, frankly. What they're saying is that Anadarko's cash flow exceeds that of Conoco, and that their dividend growth and buybacks will exceed that of Conoco. So I just think he's rationalizing it after, having it. I don't mind analysts going to holds when they've been wrong. I'd rather them do that than stay there forever.